Hey, welcome back, subscribers, to my world of stocks. I got a big update video for you today because one of my favorite high risk, high reward, speculative AI stocks in the market right now is actually crashing into the ground, and that is C3.ai, ticker symbol AI. Now, I don't want to waste your guys' time, so I'll just tell you right off the bat that this is one of the riskiest stocks to own at the moment, and it should probably be avoided by a lot of people, especially those that maybe don't understand the risk or don't have the time to do their own extensive research on the stock and stay completely up to date with everything that the company is going to be doing here moving forward because of all the issues going on. And I just really think that this will continue to be a very volatile stock in the market, one of the most volatile, that could easily continue crashing just as much as it can bounce up on a rebound. But with all of that in mind, C3 is also a stock that, in my opinion, shares a lot of similarities to Palantir from their earlier stages. And while I'm not saying that it'll ever grow into the giant behemoth that Palantir has become, I do think that if C3 is able to execute on their future and find even just a fraction of the success that Palantir has seen in the exploding AI software markets, then this could potentially turn into a multi-bagger long term, just in my opinion. And that's really what I'm hoping for myself. And so, as an AI spec stock, acknowledging the risk that it comes with, I just think that it is worth having a small piece of it in my portfolio just in case. And here's why. I'm going to break down all the crashing that has been leading up to this point, where it even fell even more this past week too by a huge amount. I'm going to let you know where I think all the risk is really coming from, where the damage is, and where all the future potential still lies too for a rebound and for the stock to climb in the future. Now, before I pull up the stock chart here, just a quick refresher for you on the business. This is a company that, again, very similar to Palantir. It's one that uses AI to improve the operational efficiencies and capabilities of other companies and even the government and military and more. This includes tech, manufacturing, security, defense, finance, energy, healthcare, and more than that too. For example, just a few months ago, the US Air Force actually increased their contract with C3 to a whopping $450 million worth to expand their predictive maintenance program, where C3 has shown that they can use AI to actually boost aircraft availability by as much as 25% and thus improving military readiness while also slashing maintenance costs. On the commercial side, they recently helped a top petrochemical company to reduce energy costs by over $3 million at just two of the company's facilities, which shows just how powerful their tech can be, having a direct and immediate impact on a company's bottom line, which is, of course, what they always care the most about. And for an even bigger example of this, I mean, you can even look at the work that they did with the chemicals giant Dow, where C3's AI software was so successful at improving the reliability of their steam furnaces that it increased their average run length while creating an annual benefit of over $45 million. And that even led to a new partnership as well. Just a couple months ago, Dow's partner company, Univation Technologies, signed a deal to license and sell that exact AI, that same AI solution from C3 to the entire petrochemical industry, which is a huge vote of confidence for them too. In other words, while C3 may seem like the most speculative, falling knife disaster of a company when you look at the stock price right now, in reality, they actually provide some very real solutions that directly benefit whoever chooses to hire them. And they've proven this time and time again throughout recent years. And again, in a fairly similar way to that of Palantir, albeit a much smaller version of that, of course. But like I said, the stock continues to fall and struggle regardless. So let's take a look at why exactly that's happening. Well, pulling up the stock chart here, we can see that not only has it lost over 80% of its value since IPOing in 2020, like late 2020, but around that time, the stock reached more than $160 per share. On this week's crash, at one point, guys, it had reached a bottom of just $14, which was also a crash of more than 30% in a single day. Now, I wasn't able to catch it quite that low, but anywhere around this level here, I think is looking very attractive for the long term. And I'll explain why in just a second. But why did it crash this much in the first place? Well, the gradual drop over the years has everything to do with, I would say, slowing growth and more importantly, a lack of profitability and the big losses, which is best illustrated by really, I would say, a tale of two stories here when compared to Palantir, who continuously won bigger and bigger contracts, now generating billions in sales, which was enough top line expansion to trickle down to the bottom line, and it's resulting in net income actually turning positive the past 2 years on over 100% growth last year too. On the other hand, though, C3's top line was always much smaller and it kind of struggled to grow to the size of Palantir, sometimes even seeing a bit smaller growth too, especially for their much smaller size. They should be growing at a higher rate. But this left very little room for error for their margins. And that continued to get worse every year with net, excuse me, guys, with net income actually falling by even more and more as the years went on. Now, this could easily be excused as simply, growing pains for a much smaller startup in AI that doesn't carry the same type of size and maybe experience and just expertise or just success, really, as Palantir. But regardless, it makes for a much riskier stock to own that investors aren't going to be very forgiving on whenever there is turbulence. Turbulence like this week, for example, where C3 was hit on two fronts. For one, the company released preliminary financial results is coming for the first quarter, but it's ahead of their earnings release. I think that's going to be coming out like early next month or so. Anyway, in the CEO's own words, they were completely unacceptable of financial results. Both revenue and profits are now expected to come in much lower than previously anticipated and at a nearly 20% decline in sales from last year, to which the CEO, Tom Siebel, partly blamed the bad results on not just a disruptive restructuring that the company was going throughout the quarter, but also on his own health issues. That's another area where they've been hit, which has kept him from being as involved in sales as he usually is. This directly ties into the news from last month that Siebel is actually having to step down now, and the company is actively searching for his replacement. Saying about the disappointing results here, quote, "Unfortunately, dealing with these health issues prevented me from participating in the sales process as actively as I have in the past." And by the way, I think he had like an autoimmune disease that he's been diagnosed with, and it really impacted his vision too. But anyway, he goes on to say here, "It is now apparent that my active participation in the sales process may have had a greater impact than I previously thought." And look, for a young, innovative company like this, losing your founder and your CEO, it's going to create a ton of uncertainty. And that combination of bad results with also the leadership, questions arising out, well, it's what sent investors running for the hills and crashing the stock. But here's where I still see some future potential despite others seeing a falling knife that is not worth touching. For one, I treat this as a spec stock, meaning I don't invest very heavily into it, but in fact, I actually limit my exposure so that if it does actually go to zero in the future, I won't be totally devastated by it. And that's a mistake that I would say especially inexperienced investors make, is that they tend to go all in on only one or two stocks without diversifying their portfolio. And if any of those bets happen to, go south for them, they are completely devastated. Their portfolios are ruined. So that is something that I never do. I've learned my lesson many, many years ago. I diversify the heck out of my portfolio. And really, as such, as a smaller spec play now in my portfolio, when I treat it as such, there's actually a lot to love about the current situation. Now, I get that the company is struggling right now, but you have to consider that the macro environment has been very challenging recently with inflation, interest rates, and all kinds of, tariff uncertainties, things that are really making companies more hesitant, less willing to take a chance on new services and actually hire C3 for a lot of their work. And on top of that, this quarter, again, included the disruptive restructuring of their global sales and services team, which seemed to really significantly hamper it here, at least in the short term. But the good news is that it's now complete, and it will likely turn from a headwind into an actual tailwind for growth, which Siebel himself noted that they're positioning well for. In fact, to lead that charge, they actually brought in experienced leadership like Rob Schilling as the new EVP and Chief Commercial Officer, who's a seasoned veteran, especially in sales, from enterprise software giants like Oracle and SAP, that I think is actually going to do a great job here of leading C3's new sales team globally. Not to mention that Siebel's health too is actually improving dramatically now, in his own words, saying that he is actively engaged again with the company and he's going to find an excellent replacement for the CEO position. And he still plans to, even beyond that, continue to serve as executive chairman, focusing on strategy, product innovation, strategic partner, and customer relations going forward. So not all, really seems to be lost there either. We're still going to have Siebel on our side, helping the company wherever possible. Plus, you have to consider that after the crash, which again, mind you needed things to go wrong for the stock price to get low. I mean, it's like, investors always say, like, I want a low stock price. Well, you're going to have to accept some issues, some challenges. You're going to to get a cheap stock price, something has to go wrong, right? It's not like you're not going to have this fantastic business. You look at Palantir, the company is on fire. Well, the stock price is going to be very expensive for that. C3 going through a lot of challenges and the stock price is crashing. But you have to consider that after the crash, I would say that a lot of this negativity, a lot of the bad news is likely, at least much of it, already priced into the stock. In fact, I wouldn't be surprised if at this valuation, C3 may actually become an acquisition target, because we know all the hype that is in AI. We know how powerful C3 can be at a lot of things that they can do. And so I wouldn't be surprised at all if another, some tech giant actually looks at C3 and considers acquiring them, which, by the way, famous Wedbush analyst Dan Ives actually agrees with that proposition too, specifically mentioning that the CEO's departure now significantly increases the chance of C3 being an M&A target for a larger tech or cloud player looking to instantly acquire their enterprise AI technology and customer lists. Don't forget, C3's platform and services have been so impressive that they've even landed huge partnerships with the likes of Microsoft, Google, Amazon, and more, where the tech giants give C3 access to more clients in exchange for their AI platform actually being integrated into their cloud services that help drive demand for both parties involved. And again, those are like three of the biggest cloud providers in the whole world. So those are big partnerships. Last fiscal year, for example, this partner network actually resulted in almost 200 new agreements for C3. It was a 68% rise year over year, and then already accounted for more than 70% of the total. In other words, demand is likely still there. It's not maybe the most robust. It's not as high as we would like it to be, but we do likely still have some positive things to look forward to here that could improve, could recover longer term. And even though this is in the current quarter, you're having a much more challenging environment here, there is like a speed bump that they're going to have to climb over. But I personally feel that it is something that can be overcome. And look, personally, I just get the feeling that many investors are maybe always just going to look at C3 as the kind of poor man's Palantir that can never quite stack up to them and will always have to be, I don't know, maybe in their eyes, kind of a failure by comparison, which I think is also heavily influencing the way that the stock trades today, because any issues seem to really drag it down a lot. But look, with an enterprise value now that is below 1.5 billion for C3, while Palantir's sits north of 428 billion, which is more than 300 times larger, I just can't help but, be more of a contrarian to how the market is valuing C3 at the moment. I think their best days are still very much ahead of them. And as a spec stock, again, a speculative one, acknowledging the risk that comes with all of that future potential, acknowledging that I could lose money on this, right? Like accepting the risk, I still think it's worth betting on. So I treat it as such. I have a small portion of my portfolio that I allocate to speculative stocks, bets that, could lose me money, but could also become multi-baggers long-term, potentially. We'll see, right? We'll see. Like, I'm not a fortune teller. I'm not telling you that this is 100% for sure the case, but it's what I personally feel could happen. So I think it's worth the bet. But hey, that's just my opinion. That's what I'm doing myself. What do you all think? You have to do your own research, make your own decisions, but I'd love to hear your thoughts. Let me know down below in the comment section how you feel about all of this. And I welcome all opinions. It can be super negative too. Of course, I'd love to hear your thoughts. It actually helps me think too if I get different opinions and stuff. So anyway, thanks again for stopping by, my friends. I hope you're all doing well out there, and I'll catch you in the next video. All right, take care, everybody. Bye-bye.